The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Hi everyone, Basil Chapman on this Friday, the 4th of February. We're looking at the Dow down 70 at 35,044. Really struggling to break that resistance area. It needs by Tuesday or Wednesday, it needs to be trading up in the, it doesn't have to make a new recovery high above 35,679, but it really needs to get to the 36,350 area. Can it do that? That's the big thing. What we are looking at, of course, is the rebound in the NASDAQ because of Amazon and the tremendous downside pressure that Facebook, I'm calling it Facebook, I don't know. These companies that changed their name, I mean, Google, just a perfect name. What Alphabet? Give me a break. What does Alphabet mean? Google's the name. And Facebook's Facebook. Anyway, so Facebook just got hammered. Deserved to get hammered, get really lousy earnings, but it was already in a sell mode in the daily chart, sell mode in the weekly chart. I didn't expect a good result from Facebook. Now, what's really important is that within the context of Facebook's, I guess I better change that name because it's officially called Meta Platforms, Inc. That peak E in the monthly chart was already for months coming down. You got the dreaded H pattern, broke under the 14-period moving average, got just smashed. Look at this. By the end of the month, we might even see the green 9-period moving below the 14-period moving average to turn pink. And that'll be quite something. And look at this. It made a lower low. I was going to talk today because it's Technical Friday about what happens. I think Dave Wright calls it the 3-bar rule. I've always had it as a different kind of denomination, but it's the same aspect because I've always said within 3 days, when there's a huge gap down, there are a couple of things that have to go on. So let me do, if I can remember, I'll come back to it in a little while, but it's gone below the low of yesterday after the gap down bar. That's usually very negative. Let's just continue. So I'm going to go to the, did I do these? Let me just do it again. Dow's down 83. Struggling to get above the 35,200, 300 level. It needs to do that very soon. Otherwise, you get the arch formation. Yesterday, I was asked, I wonder if I can move this. Yes, I'll do that now. I was asked what I thought the patterns were that I'm looking at for the next, for February. And I had said, I believe that we're going to be in a trading range. I'm just moving this to extend the number of bars to the right side. So I had shown the S&P because that was the question on the S&P, and I said, this is what I'm looking at. In the Chapman Wave methodology, there are certain patterns that just follow one after the other. They're like fractals, and they no matter what the time frame, these are the patterns that repeat. And one of the patterns that repeats so often is that you can see the H pattern where I look at three designs. One is a straight line up or straight line down. Number 2 is a cup formation going from one level down, then back to that level. It could be a V or a cup. And then another one going from one level up and then coming back to test the left side low. You can get a mix of 1 and 2 and 1 and 3. 1 and 3 is red because it's called the dreaded H, because if you take out the left side low, that can be very, very negative. And you can get a 1-to-1 of the arch from the base to the downside. Well, what happened here, you got the S&P making an arch formation successful. Then it created an up Chapman Wave inside track propellant zone, made a huge arch, next one, that held beautifully. Then it made a second one for another dreaded H pattern, or an H pattern turned into the dreaded H because it took out the left side low at 45.82 and plummeted down to the 422.62 low of the 24th of January. Then you had a rally, a very sharp rally, and you've gone to a peak, gray peak B. I haven't changed the color. That should be gray peak B because the stochastic has not gone above 80%. The MACD's good, but not great, just good. And the 9-period moving average hasn't crossed positive over the 14-period moving average. So I said that my eye, the technical analysis as well as my eye, and the eye, of course, has done zillions of charts. So my eye says there should be a rally. The rally should pull back. The 200-period moving average of 44.06 in the S&P is sacrosanct. To close under that says, you know what, this will just be an H pattern to come down. Then you might have to try to make the M. But most importantly, what I was thinking is that we could go sideways in a trading range for a while longer in this first part of February. Then you've got to be careful because my assessment says, based on just the crude oil going up, more geopolitical than anything else, having an economic effect, the wages having to go higher because there are so many jobs that are having to be filled. I'd spoken, I'm going to add this right now before we do anything else because I'm liable to forget. I've spent weeks and weeks talking about the fact that there's an inventory absolute shrinkage rather than acceleration to the upside in automobiles or trucks. You just can't. You have to pay up. You have to pay top dollar, but there's a very little choice. So that means what I was saying is I don't think that the Fords and the GMs going higher, talking about electric vehicles, I think that's just looking out and talking baloney because they have an inventory shortage. And now look at this. Ford has gone from 25.87 on the 13th of January. Something I've never mentioned here, but I'll do it right now just because I thought, what the heck, after all these years, almost 20 years, I may as well mention I usually work on my birthday. That was my birthday, the 13th of January. And here we are, 25.87, plummets down in the dreaded H pattern right there in the daily chart. Look at this. And look what happens. You come down. Remember what I said? You can have an acceleration to the downside. It's what we call the dreaded H, and I make it red. Because if you close below the left side low, you can do a 1-to-1. That would be from the just about 21 area to the support in the 18s. And now you're coming down, and the low today is 17.55. Look at General Motors. General Motors also is producing the same sort of thing. It's had a one little H pattern, went to a lower low. They're making a bigger arch formation, but totally it's already the arch formation. I suspect that GM is on its way down to the 48, 47 level. So this is a very important moment. So let me go back to the chart that we were looking at. You remember, I only get sidetracked when it stems from what I'm talking about and moves on to other areas. So now I'm going to be right back again. So even now, under all these conditions, look, the S&P is holding. It's a little under the 9-period moving average, but it's actually holding quite well. So I'm suspecting that we're going to get some kind of, I wouldn't say a thrust to the upside, but some upside activity to at least test the upper part of this Chapman wave falling exclamation. Another technique I'll discuss in a moment, and we'll go to the Chapman wave inside track repellent zone, and I'll be back in a moment.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the market's open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN. Educating investors.
What's separating you from the most successful men and women on Wall Street? That's right, information. Having all the information gives us the perspective we need to place the right trades at the right time. The TAS Profile Scanner is the premier market profile-based scanner. Powered by its acclaimed TAS proprietary algorithms, this feature-rich scanner instantly filters over 2,500 plus global financial markets, such as stocks, ETFs, commodities, futures, and Forex. This powerful suite of tools leverages instant trade filtering and strategy formulation to show you emerging trades before they happen. For a limited time, you can save $100 off your first month by using the promo code UPGRADE, and you still get a 30-day money-back guarantee, so you have nothing to risk. Level the playing field with the TAS Profile Scanner, which you can find under the Services tab at TFNN.com. Sign up today.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
So I'm going to get rid of this particular extension to the right, the 20 bars extension, go back to about 8 bars, and that'll show you. And here's the other thing. When you're looking at charts, I love, over the years, I'm very visual. So I've learned that I need to have space to the right. I can't have the chart like that, although it's great because you don't know what's coming up tomorrow. That's not the point. I want to visualize, I want to see in my mind the space to the right, the future, the blank future, and say, aha, we're holding here, a nice comeback in the Dow. Now it's just down 12. S&P's have 20. The divergences between all these indices is just, I've been saying this for quite some time. It is different this time, and you can go back to all the history books. You will find that it is different this time. We are seeing a market, unlike we've seen price movement, very much the same as, if I look at a chart, you'd never be able to tell what era you're in. But it's not that. If you look at the charts, not one, but charts together, there are very few times where the slide in major stocks has been so vicious. I mean, some of those NASDAQ stocks are down 20, 30, 40, 50% or more. And the TLT, the bonds, have refused to do anything other than go down and make yields go higher. That is different to almost any time that I can recollect that it's been so consistent. Look at the dreaded H here. This is the dreaded H with the lower low today. You have 3 bars in which to get back above. This is the TLT minus $1.90 at 139.21. The low of the 18th of January of at 140.02. Today, we had a low of 139.09, and you've got 3 days in which to get above that just to be able to rally towards the next icon. It could be a moving average, it could be a gap, it could be a doji candle, it could be not the previous high. You can't get to the previous high unless you close decisively above the left side low within 2 bars. Actually, my rule of thumb is once you've gone underneath, you can only expect to go to the previous peak or as I say, some moving average, not the previous high. And that high was on the 24th of January at 144.37. So that's saying to me, I don't know if I should do it now. Maybe I won't. Not at this moment. So that says to me that if you're looking at the yields, maybe I will. I'll do it in a moment. You know what? I've just decided, because I've already done my little trade for the day, so I'll make a little free time. I believe that Larry's voice is still, I spoke to him a little earlier on, and he was still a little scratchy, and I know that he said that it should be good for Monday, and I believe that he preferred not to do anything today. So I will do the 11 o'clock show. I'm going to make time. I'll just make sure that I'm able to do that. So, and that way I can get to the different currencies and a whole bunch of things that I want to do that is a little different to what I normally do here, looking at stocks, etc. So let's do that, and then I can include some areas that, at least for me, something I love to discuss, and I take my time. It's Technical Friday. It means I can get to some of these technicals, and I can do this here. And now what I'm going to do is I will show you the chart that I was thinking about. I usually show this to my subscribers in my overview, my video for the overview to assess where we've been and where we're going, in my opinion. And look at this. This is what I find so fascinating. Look, we've now started. Remember what I'd said? Because we went under the previous peak in the yield, in the 30-year yield, right here. That was on the week of the 8th of October, 2021 at 21.77. Because we went above it in that move a couple of weeks ago to 21.74. Remember, you have to think of it as 2.174. It's written in as 21. That said to me that had to be called a leg A. Oh my God! I'm going to show you this in the euro as well. So yeah, why is it brand new leg A? Because it went lower than the starting point before, and that says this has to be considered fresh in the Chapman wave methodology. So that says we are in leg B, a brand new B in the weekly, but it's still under the previous recovery high. And that was the high way back there in early 2021, around about 25, 2.5. So it could still fail, but this is the notation that I've got. But look at the 10-year. Look at that screaming to the upside. Look at the 5-year. Look, the 5-year at 17.68 is just like a hair's breadth below the 19.19 10-year. Why would you even, for that tiny difference, that is amazing that they are so close. They haven't been this close since way back. So and then what I'm looking at here is the iShares Global Timber and Forestry ETF, holding very nicely within this long rectangle. Now I can draw this in. I was waiting to draw it in. I wanted to wait until Friday of this week. Well, today's Friday. So now I'm going to draw this in and say a rectangle formation can last a lot longer than your patience. And you can just stay in that trading range for a long time. Well, what do I call a long time? In this particular case, it's number of bars. It just happens to be the number of bars gets you from around about May of last year to where we are currently. So that means that the timber and forestry, that means the global usage of timber and basically timber has held very well. It hasn't broken up and it hasn't broken down, but it's holding. But this is the one that really concerns me, and that's the HGX, the Philadelphia Housing Index. Look at this rectangle. Also a rectangle, but it's made up of two successive arch formations, and it says watch out, because when this one breaks to the downside, you could sometimes get not the little mini one-to-one to the downside, but even the bigger ones. It hasn't happened yet. I'm only just putting this in as a warning. I need to color this so you can actually see it. This is the HGX Philadelphia Housing Index. And I've always wondered, is this the entire, is it just because it's in Philadelphia, I mean, at the exchange there, or is it just Philadelphia? I've never figured that one out. I'll have to figure it out one of these days. So there you are. That's better. Now you can see it. Let me get you all the years, I've just loved using the color, the background. Oh, that was a mistake. using the background with color, because you can get so many variations with the white background. You don't even see it as clearly as this. I just love these the black background, and I can use all these different colors. Someone once said to me, "Hey, you should put this in the Museum of Modern Art in New York." Yeah, these are beautiful. All right, and you can see them so clearly. Look, a sideways move between 538 high in the Philadelphia Housing Index, and let's call it the 464 low. That means at any point on any weekly basis, if the Philadelphia HGX weekly housing index closes below, I'll do this again, I don't want to just grab a number. Closes under 460. That's a big problem. I'll be back. Basil Chapman, this is our Dow's down 45, S&P's up 16. See the divergence, that's what I'm talking about. I'll be back in a moment.
Are you having fun trading the markets, but having trouble finding like-minded individuals to discuss your trading and investment ideas with? Become an apex predator in the trading markets and join the Tiger's Den Trading Room only at TFNN.com. The Tiger's Den is an exclusive trading room where successful traders from around the world come to exchange trades and ideas. Join the den and surround yourself with the sharpest minds in the trading world. Subscribers to the Tiger's Den are also the first to have their questions answered live on air and can privately chat with our TFNN hosts live during their shows. Interact with other Tigers and Tigresses as they share trading ideas, news analysis, and discuss the market action all trading day. Subscribe to the Tiger's Den risk-free with our 30-day money-back guarantee and become part of the TFNN trading community. TFNN, educating investors.
You could be making money off the stock market. And if you're already making money off the stock market, you could be making a lot more. Check out TFNN and Tiger TV and get expert investing advice to give you the power to control your financial future. Go to TFNN.com and find the newsletter for you. Whether you're into trading gold, metals, futures, currencies, or options, you'll get advice and analysis to help you seriously get ahead. TFNN also features trading services with a 30-day money-back guarantee for new subscribers, as well as TFNN's Tiger Den Trading Room, trading software, and educational webinars for all trading levels. And make sure you check out Tiger TV for free on TFNN.com or TFNN's YouTube channel for live financial content from 8:30 a.m. to 4 p.m. Eastern on market days. Stop watching on the sidelines while other people get rich and become the investor you were born to be. TFNN, educating investors.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So let me just show you here. This is the E-mini, the 200-period moving average. How important is the 200-period exponential moving average? Not at all if you don't need it. Because look, when you're traveling under it, this one I didn't have all night notations. I usually have them, but I didn't here. Look how important. You broke, you hugged it, you went over and under and over and under it. 215, whatever that was, 215 this morning, yep. And then you broke down, and then you plunged from the 45.20-ish area down to the low this morning of 44.38. 44.38. And then what happens is it starts another move, makes the cup formation, peak E failure over there at about 7:45 this morning, drops down to this the 438 level. And then what does it do? It goes peak A, peak B, peak C in look, there's a matching price, but the time was extended. You had to find a different candle. It couldn't be the low because that would give you that gravy cup lopsided move. Goes to peak D, pulls back under the 200-period moving average. Look at them, how important it is. Then it tries to go. You remember the sine wave goes under and over and under once it hits the 200-period moving average, and it went to a peak E, top right there. Put a little cap right there. And then what happens is 2 doji candles, 3 doji candles, boom, it goes from 44.90 down to the low just a moment ago of 44.61, 62, and now it's trying to rally back to the 200-period moving average. So this is part of the Chapman wave methodology and the notations. So now I can go to a bunch of things that here's the 100, here's the 10. Yep, I was asked, could I show the 10-minute chart? Yep, that made a peak E. Where? At the 200-period exponential moving. You tell me, is this important or unimportant? And what I like to say is, you only want to use something that is relevant to your trading technique. If it isn't, don't even bother. And if it is, use it, and you only use it when you need it. Remember my big Sears and Roebuck toolbox? I want to have all these tools right there, active, ready to use. Look at the other thing. Look, when it crossed down from the 200-period moving average and peak E in the Chapman wave, look how the MACD turned down. Look how the slow stochastic gave you this heads up to say, watch out. And then look what happened. It plunged across under the 14-period moving average, and it stayed there until just a little while ago, 10 o'clock. Just briefly, it went green, and now it's staying green. The line over the 14 saying, you know what? There's still some internal strength at the moment. Not if we break under 44.60. But if we move towards the 44, it's at 71 right now. But if you can go to 44.75, that is, there's a good chance you can go a little higher. Just keep it as simple as possible. There we go. Now, let's get back to our story. So what I was talking about before is the different indexes. And if you look at the IWM, look how important the 200-period moving average was. Remember, I always think it's like a barbecue or something. You got your spit, and then not your spit, but the stick, and then you got your meat or whatever it is, or vegetables, and you go above and below and above like a sine wave, up and down and up and arch cup, and then if you break down or break up, that takes you away from that, and that 200-period moving average was in fact the midpoint, the fulcrum, and what happened is you broke down, you ran down to 190.60. That was all in December. January, you go to 190.60, and even here it's making it gets repelled by the moving averages. So this is saying the iShares are already weak. That's the 2000, the Russell 2000 small caps. And that says you've lost leadership there. At one point, they were leading when they had this huge rectangle. There's another thing that I want to talk about. Technical Friday, so we'll do the technicals. Look how long we were between 234 and 207 in the Russell, in the IWM. Look at this weekly chart from March. And then what happens, you have the sudden spike. It was in November, we had the sudden spike to November the 8th, 244.46 above the rectangle. And I spoke about this during my show. I said the rule of thumb in the Chapman wave methodology is when you have an elongated rectangle, narrow rectangle formation, it can last a lot longer than your patience. And when it looks like it's going to break out, sometimes it just goes from the top. And as you think it's going to break out, it reverses and goes back to the bottom. As you think it's going to break down, it goes right from the bottom to the top. Then there should be one moment where it breaks above. Then it comes back with a big test of the midpoint, in this case, 222. 222. No, it was just the 222 is the number. If it takes that out, watch out for the left side low, because if that 207 support goes, you're in trouble. And bam, we've gone now to the downside. Now the opportunity to go back says all you can do is go back into the 212 area. You shouldn't go much higher than that, because the big thing here is that the weakness, the overall weakness in the rectangle formation has now culminated to the point where previous support is now pretty serious resistance. That's the IWM, but that is the rectangle formation. Wait a minute, we're talking about a rectangle formation. Let's just enlarge this particular chart right here, the daily. This is the daily, this is the weekly, this is the monthly. Watch closely. Look what's happening. EU, and I'll spend more time on this when I do the 11 o'clock show, Larry's show, which I will do. I believe he's going to be out, so I'm going to be doing that. USD. Look, we did the same thing, but at the bottom of a rectangle formation in the euro. The euro since actually November has been in a trading range between, let's call it just to give it a nice round number, 1.14 and 1.12. It's not quite that, but let's just call that. A long time. It had one big spike, just like the IWM had the big spike. It had a big spike to the upside to 1.148, and that was on the week. No, that was on the 14th of January this year. And then it comes right back, and instead of just stopping to test the previous support, it plunges below. But what does it do? It gives you a doji candle. Wait a minute, a doji candle. Haven't we seen one of those at the top? Yes, we saw it at the exact top of the dollar. There's the dollar. It goes to a doji candle high. And that, I said, was, it looks like a C. That's a Chapman wave notation. But the doji and the pullback the next day, I said, there's something wrong with this chart. It's gone back into the rectangle. Everything about it says it looks like a D. And then what I do is I take the previous high at 96.94, and I just have to continue that all the way because it didn't break the starting point of 93.28 back on 28th of October. It didn't break that low. So this is still what we would call a larger extension of the upside. So this now says there's no question about it. This is a peak E. Alternate count, peak E. This is part of the Chapman wave methodology. I haven't broken any rules. It's all part of the strict rules in the Chapman wave methodology, but it's history. I'm going back 2020 to say that's the result. So while it was happening, I mentioned that it looked like it was in a pullback. It pulled back sharper than I thought. So now let's see what the relationship is to the dollar, to the euro. Well, the euro, 1.148 was that previous high. Today's high is 1.14829. Wait a minute. Like exact. How many times have we seen double tops get exactly to within pennies? I think about the future.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com and hit Watch Tiger TV. That's TFNN.com. Then hit Watch Tiger TV.
Hi folks, we're back. Basil Chapman, Dow's down 221, S&P's down 7. And I just wanted to finish up before we go to Earl with you, Earl, in just one moment. I just want to say 1.14828 was the high of the 14th of January in the euro-dollar currency pair. The high today was 1.14829, 0.00001 higher. What that does, because we went to a lower low, this starts a brand new, it's hard for me to say it, but I think this is probably a buy signal. Maybe I'm just finessing things too much. This should be a blue A, meaning that we should go to higher highs in the euro, meaning the dollar could stabilize but start to make slightly lower lows. And I need just really quickly to say, in the Chapman methodology, because it took out by 1 penny the previous high, that culminated that buy mode, and this basically should start a new buy signal. Now, I'll go into it more maybe when I do Larry's show after mine, but in the meantime, let's go to Earl in Seminole. Earl, how are you? Whoops. Did I get Earl?
FCX. I like it as a copper play.
Yes. So do you have a position there at all in Freeport McMoran Inc.?
Yes, I'm in it now.
Okay. So the pattern that I'm looking at, and this is really fascinating because copper, I was going to mention it a little bit earlier, so you beat me to the punch. I was going to mention it when I was showing the timber and forestry ETF, global timber and forestry ETF. Well, copper's global. And copper's just been stuck in this range for quite some time. And it's saying to me that things are not as bad as people make out in terms of the building area. But at the same time, copper is not breaking out. It's just stuck. And what I like to do is just to grab a chart and say, where's the bulk of the trading? Well, if you look at copper over the previous 6-7 months, it's kind of been stuck between 4.20 and 4.65. It's trading right now 4.44. So I don't see copper just at this moment. Maybe I'll say something different if it starts trading at 4.55 next week. But right now, it seems to me it's stuck in a range. So the copper stocks, like what SCCO, I think that's copper, right? Is it? No, oops, SCCO. Well, whatever it is. Let me go back to your question of FCX, because this is kind of a broad, although it's copper, it's got a lot of other materials as well. The pattern says that the 200-period moving average of 35.53, is that 36? I'm sorry, 36.53. That should be very good support. It has gone to a trough B, and in this environment, to see something that is kind of in play, because copper at this point is still in play. It's not breaking down. It's actually holding towards the upper range. I was surprised that the copper stock, FCX, dropped so sharply from 45.88 to the 34s, maybe 35. And this bounce hasn't had follow through. So I think as a longer term play, I think Freeport-McMoRan is definitely in play. But as a short term, I would not be surprised. Let me put it this way. If by Tuesday, FCX is not trading above 40.10 actually, and that's 2 points higher than where it is now. I don't know what's going to give it that kicker. It might just be stuck here. And I would just say that if it breaks below 37.50, I think it's going to fill the gap and probably try to test 36.53 again. So just on the very short term, I don't have any signal to say that it's a buy, but I have a signal to say, looking out, if it does certain things, it's going to be very positive. But it seems to me I might have a rectangle formation in the weekly so that it's now trading towards the upper range and then going all the way to the lower range. So I just don't see it as a play right now. And I think together with what we're seeing in the economy, that maybe it's saying that the stocks, and that's the reason why if you look at some of the gold stocks, the miners, like the GDX, gold, it's almost like they've separated to a certain extent, the price of gold and the GDX. GDX now is up 17 cents. With the dollar smacked down like this and the euro rallying, the big question has to be, is it interest rates that is affecting gold? I don't know, but I'm putting the FCX, the copper, in the same category, and I'm saying I just don't see the signal to really break into the 41, 42 area yet. I could be wrong. Monday we could do that, but right now that's not what I see. So I just say keep a fairly tight stop. You can always get back in, but if you're looking out longer term, then give it at least a point and a half. But I personally would make it much tighter.
That's exactly what I needed.
Okay, well, I hope that helps you. Thank you so much for calling. Always appreciate it all. So,
Thank
folks,
you.
I wanted to mention that the volatility, my pleasure, the volatility index, and this is a big clue. I had a question, more a statement than anything else in an email that I got. And the volatility index has bounced off the 200 period moving average right there, exactly. And it's now above the 9, and it's green. The 9 is over the 14th. So we've lightened up on our stocks. So we've had very tight stops. There was a stock I wanted to put on this morning as a buy. At the last second, I took it off. I said, don't take it off. You thought about it. Keep it on. And I said, no, this market is just too volatile. I want to conserve as much cash as possible. We want to be there when the big buy comes in. In the meantime, we do some trading that's different, or we're looking out longer term. We're trying to buy a particular position in something that should be the spring and summer outdoor entertainment field. And just being very selective. But for my overview tomorrow, I'm going to be discussing all these that might become newbies, and that includes stocks like a General Electric, which is holding really well, IBM, just what is it telling us about the economy, etc. So what I also want you to do in this particular section before we moved on is just to cover some questions that I got. I'll do a little bit more when I do Larry's show straight after this about Bitcoin. Bitcoin is now up 3,210 at 39,475. These very quick peaks within a rectangle formation like this right here. Look, there's your rectangle formation. So this says you could have a rally in a stair-step move, making a move up, then a move down, and then a move up, and then a move down, and then a move up. And that says you have now filled in a lot of the work in trying to build a base. But it needs to be with much sharper price extensions and then break the left side high. In this case, try to get to the 44,000s. And at 39,505 right now, all you're doing is trying to recover in a stair-step move the whole pattern that could take you to maybe right here, the 41,150 level in the Bitcoin futures. So very good action over the last few days, but not great. And that weekly chart says, wow, there's a lot of work to be done before you can really get the price extension that says, all of a sudden that 45,464, is it 46? Yep, it's 46,000 and a half. 200 period exponential moving average that was resistance, then support, and then major resistance, it's going to take a lot to get that back into focus. I'll be back in a moment for the final part of this show.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Are you looking for a secured investment which pays you on a monthly basis? The Tiger First Mortgage Program may be the program for you. The best rate on a 5-year CD in the country right now, according to Bankrate.com, is paying 1% per year or $1,000 per $100,000 invested. The Tiger First Mortgage Program pays 7% per year, paid monthly, on secured, high-value, buildable properties in St. Petersburg, Florida. The investment is for 4 years, paying 7% per year or $7,000 per $100,000 invested. Your investment is secured by high-value real estate in St. Petersburg, Florida. Your investment can be anywhere from $100,000 to $500,000. Do you want to make $1,000 per year on $100,000 invested or $7,000 per year on a secured Tiger First mortgage? The Tiger First Mortgage Program may be just the program for you. The Tiger First Mortgage Program pays 7% per year, paid monthly. For more information, you can call 877-518-9190. That's 877-518-9190.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
So yesterday I discussed Jets, that's the U.S. airlines, and I said, let's just wait and see. I think DAL was a question. I said, just hold off on that. Let's see what happens by the end of the week. We get into the end of the week. So Jets, I'm just going to say that it's just stuck. It's making lower lows and lower highs. It's down 39 cents at 20.72. We don't yet get any inclination as to what will happen in the airlines as we come back from COVID. People start going out and traveling more. But that's what we'll keep an eye on. I would say hold off for a little while. Because then a question came in, and this is really pertinent to the Chapman Wave methodology. I usually spend more time on it, but this time I use the S&P as the focal point. But what I am looking at here, and the question is, in the Chapman Wave methodology, once you get a buy signal upgraded to a buy mode, I haven't got that yet. In fact, we've only got a buy signal. If we can get into 36,350 by Tuesday or so, then I'm going to say, yes, there's a chance we could go to a D. But this arch formation can fail at a peak B or even a peak C. It doesn't have to necessarily go to a D. If I get a buy mode, it should go to a D. So all I'm saying is I'm rather looking at I don't now get locked in to anything Chapman Wave-ish. I'm just looking at the pattern that says arch formations fading at this Chapman wave inside track repellent zone. It needs to break above that, and in this case, it's a simple thing. It just has to go to 36,290 or higher to say, aha, I'm out of that resistance now. That's a propellant. And then you want to make a leg C above 35,678. And now what's really important about this, if you look at the weekly chart, in a way it kind of looks like an expanding cone. I could quite easily do this, draw a line there. Whatever it is, it's getting hot. We've been in the same range since April of last year. 35,091 was the high. Back, I think it was May. Where are we right now? We're at 34,858. So think of this. Big distribution. At some point, we have to test the downside. But we go a little higher first.